imbalances. An imbalance of orders is when a market exchange receives too many of one kind of order, buy, sell, limit, and not enough of the order's counterpoint. For sellers to complete their trades, there must be buyers and vice versa. When the equation is favouring too heavily in one direction, this will push price action in that direction. This creates an imbalance. This is an imbalance or inefficient price action, where there are no wicks touching between the previous candles. This means institutions have injected price to one side and did not collect orders for the opposite direction. The wick to wick is the imbalance. People will see this as impulse, which it is. However, I see it as an opportunity. These imbalances will get filled at one point. You can use this to your advantage to enter trades. This is an example of efficient or balanced price action. The wicks are touching between the candles. This means price action is filling the buy and sell orders as price moves in a direction, leaving no imbalance in the market. Now let's head over to TradingView so I can show you some examples of how to identify efficient and inefficient price action. I'm also going to share with you a little bonus secret.
I'm going to show you how to read inefficient price action or imbalances in a trading market. All these confluences I'm teaching you in my videos will add up for the bigger picture of executing high probability trades. As you can see here, we're in Euro US dollar on the daily chart. This little pink box here, this is an imbalance, okay? So this is when we receive too many of one kind of order, so too many buy orders, and we don't have enough of the sell orders. This is creating an imbalance, all right? As you move up here, we've got efficient price action, all right? Price action is moving up. All the wicks are touching. Wicks are touching. We had imbalance here, but it came down. The wick filled it. Wick filled it. So what I want to do now is just follow the market and look for imbalances and show you how they do get filled, okay? So let's just bar by bar replay and click through and see what happens. As you can see, this is liquidity building up. I will show you what liquidity is in my next video actually, so make sure you watch that. So we've got liquidity building up, price action is moving down. It's very efficient still, very efficient. And as you can see, we've got a little bit of imbalance here. Great. This is on the daily chart. We'll just keep following price action. Will they get filled? No, it's very efficient, ranging, moving downwards. Let's just see if this gets filled. Price action loves to gravitate towards imbalances, all right? This, like everyone sees this as an impulse, which it is. However, this price action is actually really weak and it will get filled. So let's just keep following price action. See what it does. Price action is moving efficiently on the daily here. We've still got this little imbalance in here, this will gravitate towards the lowest point of resistance. However, I know what I can see. We've had a change of trend here and liquidity sweep here. We've got imbalance here. Price action will likely come down and fill it. We'll see what it does first. Create all those equal lows. And there we go. We've filled imbalance, okay? Let's see what next price action does. So this has been filled. Let's move this over. Same thing, as you can see, price action moved up, it's come down. Let's fill this little bit of imbalance here. Most of it anyway. Let's just keep watching it. All right. Okay, I just want to rewind it back a little bit here. When there's two candles that have imbalance, this is called a gap slip, all right? This is when price action is weak, all right? So up here, you've got one candle, it's just imbalance, but it's not as weak as two candles, or three candles, or four candles. you can use this to your advantage, okay? Especially on the lower time frames. Let's just follow price action. Daily is coming up, filled it, and now price action is moving up. And look at this, perfect. Look at this, pretty much to the pip, it's got filled, okay? Same sort of thing. Now let's watch price action. We've got imbalance over here. Let's just see how it moves. Will it come up? It's still dropping down. We've got imbalance here. So imbalance will just get filled all the time. So you can use this all the time. I'm just trying to teach you how you can see where the market's going to go and see where it's going to fill. So we're ranging sideways. It looks like we'll push lower. We're in a downtrend. So most likely we're going to come down here. We'll have a change of trend and we'll come up and fill these imbalances, even the wicks, okay? Let's keep following. I'll just keep moving as we go. You know, you got imbalance here, you got a little bit of imbalance in there. And I'm just trying to show you how the market moves. All right, market's coming up. Same thing again. We got imbalance here. A little bit of imbalance there. So later on, this price action will get filled. We have change trend. This is a change of trend here. Price action is likely going to come up and fill these areas. The wick, this is where we can, I know this is a V-shaped recovery. So I know in the lower time frame, this will be an order block or an imbalance, okay? So we might just drop down to the 4 hour. And here you go. See price action creeping up to fill this imbalance. Filled imbalance, we've actually got a gap slip just here now. What will it do? It's still creeping up. And there we go. We'll come back down. We'll fill the gap slip straight away. Okay. Let's just drop down to the 4 hour. Look at that. To look at this wick up here. All right. There we go. So look, straight away, this is a gap slip. I was hoping for an imbalance, but it is a gap slip. So that's spot on there. Price will gravitate towards this and fill this area. On the high time frame here, we have imbalance. On the lower time frame here, we have a gap slip in the 4 hour, okay? This will get filled. So let's go to the daily chart. And let's just see how price action moves, okay? Price action here is efficient. We've got imbalance here again. I just want you to, I'm just trying to teach you how to identify imbalances, okay? Let's just move up. And as you can see, look at this, price action, filled imbalance, pretty much to the T, had a rejection, and changed, all right? I still think price action will come up here, fill this, and there we go, same thing again. We've created gap slip here. That means price action is weak. We've created a new high. Price action looks like it's going to come up here. And look at this straight away. Look at that. Let's go back one candle. This is 3 candles of gap slip. Okay? No wicks touching between them. That's weak price action. High probability this will get filled soon. Straight away. Filled. Now we're moving up. Higher. What have we done here? There's gap slip in the lower time frame. Filled. Now we've got imbalance over here. Plus here. We've got gap slip here still. So we know price action in the future will definitely come down and fill this. Okay. So this is just a brief overlook of how imbalances work and how price action can move between efficient and inefficient price action. Thank you for watching. If you enjoyed this content, remember to like and subscribe and check out our other links in the description below. Trade safe and have a great day. Thank you.